Hello, Jim here. Trading options is a great way to make some extra income every month. And the most important piece of it is finding really good companies at great prices. At times, the companies might be great, the numbers may look really good, but there may be too much hype. The stock may be too pricey. And I think that's what's going on currently with Palantir. There's been a lot of YouTube influencers that have been talking about it, suggesting you should make significant trades in it. I believe it may be overpriced. Today, I want to talk about that. I want to share with you a trade I made recently, and it's kind of a little bit of reverse thinking. So stay tuned. I think you're going to enjoy what I have for you. Okay, so what I've done is I've opened up Seeking Alpha with Palantir. You can just see it's just shooting through the roof ever since the announcement came out that it's being added to the S&P 500. It's just gone up and up. I believe the announcement was late Friday, and it's gone from, I think, what was it, right around 30 all the way up to 34, so almost 13% just today. Now, I do like them. I think they're a very good company. I've been trading on them before today. My main concern with this video is just I believe they've gotten ahead of themselves. The current PE forward PE is 85, which is really high. And it does matter how much you pay for a company. And Palantir is getting to that level where it's just too pricey. As a company in general, they've got good profitability. They also have no debt. Year-over-year earnings looks really good. But does that constitute or allow for such an expensive price? I don't think so. My guess is at some point they're going to drop back. They may drop back as low as 25, 22, something along those lines. More along the lines of a PE around 35, 40, something along those lines. I just believe they've gotten a bit too pricey. Now, if you compare them with another company, like if we compare them with Google, you can see here year-over-year earnings. So if you compare it to Google, theirs overall for all 4 quarters is 24%. So they're looking to grow their earnings 24% over the next year, whereas Google is 16. Profitability, their profitability isn't as good as Google's. Return on equity is a third of what Google's is. Return on assets also like a third. Profit margins are considerably less than Google. And then if you look at debt to equity, now they don't have any debt. You can see here they have no debt, whereas Google does have some debt, but it's very, very small amount compared to their equity, only about 5%. Price to earnings, and this is what I was talking about. You look at price to earnings. For Patreon, it's 85.2, and then currently, and Google's been hit pretty hard recently. Some of it has to do with the government potentially going after them. I don't know that it's going to have a dramatic impact. I don't see them being broken up. Might they have to change the way they do business, kind of like Microsoft had to do, in the 90s, I guess, or late 80s? I could see that happening. But I don't see Google being, undone or taken apart. And actually, Google, I think, is at a good price. I believe it's right around 150. So we can look at Google, which I do have some positions that are in the money now with its recent drop. And if you look at some of its financials too, you look at its earnings, looks similar to what Palantir's looks like, but this is a giant company. I mean, they're huge. And their profitability, again, is A+. And they do pay dividends. They've just recently started paying dividends, and they're going to be increasing them probably fairly dramatically. Their payout ratio is only 2%, less than 3%. So what I've done, I believe they're overblown, so I actually have taken a different tact with them. I actually have decided to buy a put. So I'm looking at, I purchased in November 15th, right within a couple of weeks after the election, a $25 put with the hope. So literally I paid, I believe, 52 or 53 cents. And it's like a 10 delta and I bought 5 contracts. So my thinking is between now and after the election, they're probably going to drop at some point. Now, I've also wondered, will they have an impact if, depending on what happens with the election, if Elon Musk is brought in to trim the bureaucracy, will that have an impact on them? I really don't know, but it could be a headwind for them. And do they have competition? Do they have a really deep moat? I'm not sure about that either. I've also looked at their software, and I do like what I see, but they're not the only player in town. Competition, their moat is not as deep as, say, a Google's with YouTube or YouTube TV or, any number of, even their search engines, and, Google Cloud is doing a lot better. So what I decided to do is to buy 25 puts, and I'll show you what that looks like in my planning worksheet. So here, just literally a couple hours ago, I purchased puts at 25, and you can see here the current price was $34.14. I paid $268 for them. And what's interesting is they're kind of on sale. You can see here they're currently down 53 cents. Now, when I made the trade, I believe they were down almost like 80 or 90 cents. So it's almost like a fireside sale with some of these puts. And what'll happen is, as the price does drop with them, and again, I'm not saying it'll happen right away. It might take a couple of weeks for it to happen, but we can kind of get a look at what their premiums look like if we go pretty close to, so $34, it's right around $3.10. If you look at $30, so $4 cheaper, it's like $1.53. So if they dropped $4, I could potentially, for each contract, pick up maybe $1.50 at the 25 range. It could very well go up that much. And that's my goal. I'm not going to keep these. Like I said before, I do have, I also have 4 contracts that I purchased, calls at 12. I did the poor man's covered call. And I plan to initiate the call side where I purchase those calls. I'm going to have those shares assigned to me. And then the $25 call that's expiring in January 25, I'm probably going to roll that up and out. And I may even make more trades with them. But again, it's just too pricey. I like them, even 25 in my mind may be too pricey. I believe 25 would still give them almost a 50, 55 PE ratio. So my hope is to kind of keep track of this trade and then hopefully triple my money, double my money. And it could happen fairly quickly if they get any kind of bad news, meaning if, the government comes up with something, or they lose a contract with the government, or if they have some issues with earnings and they slightly miss earnings, I think they could drop quite a bit. Actually showing the wrong one. That's them right here, 268.39. So that's what I wanted to talk about with you guys. I watched several YouTubers that I, kind of competition. I just noticed they're pushing Palantir. It seems like day in and day out. Just be careful. Understand that the price you pay for these stocks is really important. I like to own them. I like to own them forever. At some point, Palantir may be worth $35 a share, but I don't think right now. I think it's price for perfection, and if anything goes wrong or goes south, it's going to drop like a rock. So let me know what you guys think. I wanted to get this quick video out mainly because I've seen so many other influencers or YouTubers, suggesting buy. I think it's important to kind of take a step back and kind of look at how you want to do, how you want to handle Palantir. Like me, you probably like them, and I do want to own. I definitely will be calling those 4 calls at $12 and paying the $12 to own 400 shares. So again, that's what I wanted to talk about. Let me know if you agree, disagree. Am I missing something? Is there something about Palantir that warrants these really high prices or even higher prices? I typically try to answer my comments within usually 48 hours, hopefully less than 48 hours. So look forward to hearing from you, and thanks for joining me in the video.